Hello traders, welcome to another episode of our free Forex training on this YouTube channel known as Leading Forex. My name is Kofi, your admin for this channel. Today we have another episode of our tutorials, and today we'll be doing another moving average setup. Okay, and what I mean by that is that we've been doing a series of moving average tutorials for the past 3 weeks. So today we'll be looking at another trading strategy using moving averages. Our ultimate goal on this channel is for everyone to find that which he or she wants in terms of Forex on this channel. That is our ultimate goal. So come along and take your time, watch all our videos. If this is your first video, then I can tell you that we have a lot of videos that you haven't watched yet. All you need to do is to go to our playlist. The name of the playlist is Forex Training for Beginners. I'll put the link of that playlist at the end of this video. Getting to the end of this video, I'll put that link there. So if you need a playlist, just wait till this video gets to the end. Then you just click on the link, it will pop up. You click on it, then it will take you straight to the whole playlist. Then you can begin watching our videos. We have about 46 videos in this playlist. So take your time, watch all our videos, and I'm sure if you are a new trader who wants the best way or the best way to learn Forex trading, then I'm sure that playlist will do you a lot of good. So we will continue from our series of videos we've been doing on moving averages. And currently, as we speak, today we have another trading strategy. In our last episode, we talked about how you can use moving averages as support and resistance. And today, it is going to be another strategy for you. And that one, we will call it moving average envelopes. That will be our strategy for today in this video. So today, we are looking at moving average envelopes. Now, when we say the word envelope, I'm sure you understand what an envelope is. Now, an envelope is more or less a wrapper that you can put a piece of paper or money or something in it. I'm sure that is clear. Or maybe a covering, let's say a covering, or a wrapper, like I said, or maybe a case. Okay, let's say a case that you can put something in it, okay? That is an envelope, and I'm sure we already know what an envelope is because we do put money in an envelope, we put letters in an envelope, and so many other things in envelopes. So today, we're going to look at how moving averages are used as envelopes, and then the envelope strategy is used in trading the Forex market. If you're okay and ready for us to roll, then stick and stay and watch this video to the end. And I'm sure you'll find what you want here. All right. So let's go quickly to our video and then see the tutorial as it is. So just as I've said, today we are looking at moving average envelopes. So that is our tutorial for today. Now, like I have already explained, an envelope is a wrapper, a case, or maybe a covering that we can find something in it. You can put something in that covering or in that case or whatsoever wrapper it might be. You will definitely find something in it. So we put letters, we put money, and so many other things in envelopes. So today, is that the same kind of envelope we're talking about? Yes, to some extent, but it will differ a bit. So just stick and stay. The envelope style of things will differ here in terms of Forex trading. So let's quickly roll and get to what we want to get to. Now, you already know how to get in touch with me if they need be. So these are my details on Telegram, email, phone number, or WhatsApp. These are the details on how you can get in touch with me. I'm a Forex trader in Ghana. I've been doing this since 2017, and I'm still in it. And I want you to join so that we roll, all right? The Forex market is so huge that even if the whole world will want to do Forex, we will still need people. All right. So the space is so huge and it can contain everyone. Is that okay? All right. So let me move away from how to get in touch with me. And here is what we stand for. We want to be your alternative. And whatever status quo you are stuck in, be it money making online, that is what we stand for on this channel. So we want you to be part of this channel by subscribing to our YouTube channel. And also make sure that any video we put out here, you will click to like the video. We will appreciate that a lot, especially when you like our videos. Because when you do that, you are telling YouTube that YouTube, show this video to more people because the video is good. That is what it means when you like our video. So make sure you like our video to help YouTube algorithm to show our video to more people. Thank you that you will do that for us. Okay, now here we are on moving average envelopes. Now, these are some pictures or screenshots I want to show to you. After that, we will go on the MT4 and see how we can get these envelopes. Is that okay? Now, remember, we have already defined what an envelope is. So you already know what an envelope is. So an envelope contains something, maybe a letter or money or something can be found in it. The same way with moving averages, you can use them as an envelope. And then how do you use this as an envelope? Now, when you look at the chart you are seeing right now, you will see that we have moving averages. There are about 3 of them. And then one is at the top, one is in the middle, one is at the down. And these 3 moving averages, we have the price moving in this moving averages. The top one serves as the top of the envelope. The down one serves as the down part of the envelope. And then we have another one in the middle, which is another moving average. So the top part acts as resistance. And then the down part of the line or the envelope acts as support. So we have the upper part of the envelope, and then we have the lower part of the envelope. So how can you get moving averages to serve as an envelope like this? So if you have this as an envelope, how do you trade with the envelope? So when the trade gets to the resistance, we all know what to do when a trade gets to a resistance. So you will sell when it gets to the resistance zone, and then you will buy when it comes to the support zone. Do you get it? Yes, it's as simple as that. That is how this moving average envelope is traded. That is one of the ways, okay? This is one of the ways moving average envelopes are traded. You can trade it as support and resistance by using the upper part of the envelope as resistance or using the lower part of the envelope as support. So when price gets to the lower part of the envelope, you will buy. And when it gets to the upper part of the envelope, you will sell. Is that okay? So you see the areas that have been marked. These are zones or areas that you can take a trade, which is your entry. All right. So you can either use these moving average envelopes as support and resistance by looking at it as it is on the screenshot right now. That is one of the ways. Let's look at the other ways you can use this moving average envelopes. Now, this is the moving average envelope, and you can see how nice the upper part and the lower part is showing. And then the price or the candles are in the middle of this envelope, as you can see. Exactly the message we are trying to cut across to you. Now, there is another way you can also trade using this moving average envelopes. And that is trading by looking at the upper part of the envelope as resistance, and then the lower part of the envelope as support. And you know this, that support can either be broken or held. The same way with resistance. Resistance can either be broken or held. So if you want to use, again, this envelopes as support and resistance, but you want to trade it using the breaks. Remember, these are two different things. One, you are trading it, using it as the break, when the resistance is broken, or when the support is broken, you want to trade it by that formula. So if you want to trade it by that formula, then once the upper part of the envelope is broken at a resistance level, then you will take your trade up. That means the resistance level is broken. And you can see clearly how this candle went past the resistance line, which is the upper part of the envelope, which is also on a very strong resistance zone. And you can see how the candle went past the upper part of the envelope and also above the resistance zone here. So that is to tell you that there's a clear break of this resistance level. And so there's an upper movement. The opposite will also be true. When you see this on the downside, then it means the support is also broken. And therefore, there is a need for you to do what? To take a sell. But in this case, if we are to use this as an example, then we'll be looking at a buy. When the envelope is broken, which is the top of the envelope, that will be the resistance, or the top of the down part of the envelope, which will act as support. Do you get it? So this is how you can also trade using the moving averages envelopes. Is that okay? So we are going to go to the MT4 and see how we can actually set this up. We'll go to the MT4, see how you can set this up, and then use it to trade. Now, let me say this before we quickly go there. Let me say this to you, all right? Listen and listen carefully. When it comes to the moving average envelopes, there are a lot of strategies out there on the internet. There are people who have already tested some strategies using the envelopes. And then there are people who also have other alternatives. I'm going to show you one of the alternatives when we go to the MT4. So don't go yet. I'm going to show you one of the alternatives when you go to the MT4 or when we get there. So I will advise that when I show you how to set this thing up on the MT4, it will be good that if you are finding difficulty in setting up the envelope, maybe you may have to go on YouTube and check other people's strategies, samples that people have, and then test it to see if their samples will be good to use to trade. Is that okay? So I am going to go to the MT4 right now. Then practically we'll look at how you can set the moving average envelopes. Now, the moving averages, you already know that we have two types, either exponential or simple moving average. So you can use any of them to set this envelope. Is that okay? And then let me also say this before I forget. There are people who have also developed indicators that act as envelopes. Okay? There are people who have developed indicators that act as envelopes. So I'll be showing you one of the indicators, okay? For just showing purpose, I'll be showing you one of them so that in case you want to go on the internet to search for these free indicators that act as envelopes, you will know what to search for. Is that okay? So like I said, give this video a like so that it will help YouTube to actually show this video to a lot of people. Because when you like our video, you are telling YouTube algorithm that this video is good, and so show it to more people. So make sure you like this video for us so that YouTube can actually show it to more people. Is that okay? I want to believe that maybe somebody liked our video. That is how come you were also able to chance on these videos. So do the same so that another person can also see it. Is that okay? Like the videos for us. God bless you. All right, so there are indicators which also act as envelopes. And I'll be showing you some of these indicators, maybe just one of them. Then you, based on that, to look for more and then try them and see if some will be good. Is that okay? Better. Now, let's go to the MT4 quickly and then see what we can learn today. Now, this is our MT4. How can you set moving average envelope on your chart? Now, you go to trend indicators, all right? Under indicators, this is a custom indicator. It's already in your MT4. Or if you are using the MT5, it is already in your MT5, okay? So when you go to trend, let me go there quickly. You go to trend, you come to trend. Under indicators, it is the first indicator you will see. Under indicators, you will see trends. So when you click on trend, there's another group of indicators in the trend. So when you click on trend, these are a group of indicators that are below, which you will find them in the trend envelope or trend indicators. Is that okay? So what I want to say is that under trend, we have a lot of indicators that act as trend. And one of them is moving averages. You already know that. Now, apart from moving average, you see envelopes. Envelopes. Under trend, you see envelopes. So you click on envelopes to bring it on a chart. So let me double click on this. Now, you see that there is an open chart. This is where you will do the settings. So let me just put this on reset. At the default setting, this is what you will see. When you open the envelope or the envelopes, it will show you this. Now, if you click OK at default, this is what you will see on your chart. This is the default envelope you will see. Now, when you see this default envelope, you can adjust it or set it for it to act as an envelope. And that is what I want you to pay attention and listen carefully. How do you set this envelope to do exactly as you saw on the screenshot? Now, you can edit this indicator. Once you bring it on the chart like this, you can click on the indicator, you double click on it to edit. It will show you for you to edit. Or if you are clicking on it and it's not showing, just right click on the chart. Then you go to indicators list. Go to indicators list. The envelope indicator is the only one on this chart. So you see it there. If you have more than one indicator, you see all the indicators you have. But since we only have the envelope indicator here, now you highlight on it like this, then you click edit. When you click edit, it will bring you back to this area like this. Now, it will ask you to set your period, your moving average, the method you want to use, whether simple or exponential, it's also there. Then apply to close, then the deviation, you also have to set the deviation. So in our case here, we are going to be setting the period and then the deviation. And then maybe the MA method, whether you want simple moving average or exponential, you may have to select that. Is that okay? So in our case, we just want to change the period. So let's assume that we want to change our period to maybe 50. 50. And then we want to leave the method on a simple moving average, okay? Then the deviation, this is where the settings will come. So you choose the right settings you want to use. But in case you have no settings in your mind, that is where I have advised that maybe you have to go and check other people's settings that they think can make profit. But let's assume that currently the deviation at default is 0.10%. So let's say we want to change the deviation to maybe 1%, so 1.00. Then let's click OK and see how the envelope will expand. So OK, you close. Now you see how the envelope has expanded. You see it, that it has expanded. So assuming this settings is not what you want, you can go back and edit again. Then maybe you change the deviation to maybe, let's say 2. Let's see 2. You see that it's expanding wider. You see it opening wider. Now, what if this is not enough? But if this is what you want to use, then you can see. If you want to use this as support and resistance, then this will be a good trade to take as what? A sell. And this is on the 4-hour time frame. This on the 4-hour. So if you are acting this as resistance from this to this level here, that is 206 pips. So if you sold here 206 pips, let's go back a bit and see. This one would have given us a buy. So if you bought here, what would you have made? This is just for practical purpose. So you would have made maybe 124 pips if you bought over here. You understand? You see, so this would have given you bad trades. This wouldn't have given you any better trade here. Again, here wouldn't have given you any better trade. And then maybe here you wouldn't have gotten any better trade from here. You see that? But this is the settings. So you may have to keep tweaking the settings so it suits what you want. So if the period is what you want to change, maybe the period you want to change it to maybe 30. You can change the period or 20. Let's see. This is 20 against 2.0 deviation. So this is 20. And see 20? 20, it means you would have only gotten, it would have been difficult to get a trade looking at the 20 because as you can see, there's no clear touch. Over here, there's the touch, but yes, so the trade went all the way up until maybe somewhere here. You get it? Okay, so this is it. So maybe if you need a middle line, then you may have to bring another moving average in the middle. So let's say you want 50 in the middle. So that 50, let's make it color yellow. So yeah, you see there's a 50 in the middle now. So you get your 3 lines kind of something, you understand? So if you don't need a middle line, then you can delete this one and then you'll be left with just the tops and then the down. So the deviation, it will be good for you to get a perfect one to set. You change the deviation. If the 2.00 is not the best, maybe 1.8 that is best. You can change and choose 1.80. 1.80 and then you click OK. I don't know what settings will be the right settings to use, but if you need an envelope, this is how you can actually set the envelope. All right. Now, if you want to use it as a break of support and resistance, it will also depend on the settings that they might give you or other traders might have used that they think is best. But maybe if 20 and then I use 1.00 as my deviation, let's see. This will still not give me a better break. But let me see if I change the deviation again to maybe 0. Maybe 20. I'm just trying to see something. Okay, maybe this one will be better. So here the envelope is broken. So you could get a buy here up. Here the support is broken, but there wasn't anything good here. Just 32 pips. I don't know if you are a scalper, then 32 pips will be enough. But if you are a day trader, here there's a break on support. 75 pips. There's a break on the resistance at the top here. So buy, you get 65 pips. There's a break on the support here. Down, you get 69 pips. There is a break over here at the top, but only 30 pips. So you see how it is. There's a break over here too. Yes, you get some 100 and something plus pips. There is a break at the top here. You get how many pips? That is about 31 pips. So I don't know what setup will be the best to use, but you may have to find out that or do your own settings. You see that how I'm just changing the figures and changing the deviation. You may do that. And then out of that, you will end up getting something good that will be yours. All right. Or if you don't need a simple moving average, you can edit it and change the method from simple to maybe exponential. So this is exponential. And maybe with exponential, you may get something better. Who knows? So you see, here would have been a very big catch from here all the way up. A very, very big catch. About almost 872 pips. A very big catch. So the envelopes, the deviation and the period you may have to use will depend on your settings. What might work for you? Is that okay? That is that. Now, let's go to the alternatives. There are people who have set up their own indicators. They coded their own indicators and they are giving it out for free. And so when you go search on the internet for free envelope indicators or free, what do I even say? Free envelope indicators download. And if you have already watched our videos from the beginning, if you have watched our part 1, 2, 3, all up, I have already shown or given you where to go and get all kinds of indicators. I have done that already. So if you want that, then you may have to go to the playlist. And I told you I'll leave the link of the playlist at the end of this video. Or you can go to the description of this video. You will see the playlist. The link to the playlist is at the description of this video. You click on the playlist, you watch the videos, I'm sure you will get to know where to go and look for free indicators, okay? So there are people who have coded indicators that act as envelopes. And I want to show you one of them. And here is one of them. You see, this is one of them. So this one here acts as envelope, all right? So the up and down thing here will be a sell, another sell here. Here will be a buy. Here will be a buy. You see that? Yes. So maybe if I have to choose another pair, maybe let me pick this one. You see? This one has given you a very long buy. This is Chef JPY. If you want this to use, these are there. So you see from here all the way up to how many pips? About 800 and almost 900 pips. All the way up, 900 pips. So if you want to use them, there are a lot of them on the internet. There are a lot of them on the internet. And they have different time frames. This is on the 4-hour. So you can put this on daily. This is the daily one. If you put it on daily, it will give you, if you want to use it as support and resistance, this is the resistance zone. This is support zone. This is support. This is also support zone. You understand? So there are lots of them. This one, if you want the name, I can give you the name. If I go to indicator list, the name is highway channel indicator. Okay. The name of this envelope indicator is called highway channel indicator. It's free on the internet, so you can go and look for it on the internet and download. But I am not saying that is what you should use. I only downloaded this to show you how to look for channel indicators. Is that okay? So this is a highway channel indicator. I am only using it for practical purpose and how to get better ones are on the internet. So you can search for free ones and then you can then test them and see the ones that will be perfect for you to use. Is that okay? So this is how you can search for the free indicators that are also there to act as envelopes. They are also there to act as envelope. This is 1 hour. If you go to the 1 hour time frame, so this is for 1 hour time frame. You see how the indicator works. This is on the 1 hour. If you want to use these envelopes on the 1 hour, then you can use it on the one. So whatever time frame, if you even want to use it on 15 minutes, this is on 15-minute time frame. If you want it on even 1 minute, this is on 1 minute time frame. This is 1 minute. If you want 5 minutes, this is on 5-minute time frame. 30 minutes, this is on 30-minute time frame. So whatever time frame might be perfect to use, you may have to experiment and then know the best time frame to use. Is that okay? Now, let me say this before I leave. Let me say this to you. Listen carefully. I am sounding this warning or caution because I am teaching you the way to go in terms of Forex trading. You may not be seeing people doing this on the internet. The reason is because it is not easy to compile and come out with something that will help people to trade the Forex market the right way. But I'm taking the pain to give out details and then give you the details as you need them, and then give you the way out so that you can search for the right things on the internet. All right. Now, let me say this. Indicators are not 100%. Some of them, majority of them, about 95%, even if I should say 98%, I'll be right. Even about 98%, although I am not backing this with any statistics, but it is the real truth out there, that indicators do not have 100% assurance. They do not give you 100% assurance. Not only indicators, every type of analysis you want to do, whether you want to do technical analysis, fundamental analysis, sentiment analysis, or whatsoever trading strategy you may have out there, the assurance is not always 100%. But since I'm talking about indicators, let me just lower the whole discussion on only indicators. Now, indicators, most of them, they do what we call repaint. They repaint, okay? Repaint simply means they readjust themselves as the trade goes on. Okay, they readjust themselves. So indicator might be telling you it is time to buy. Okay, and then you buy. Before you realize that indicator has readjusted itself. And then the area that it told you to buy is actually telling you now that it is not a good area to buy. What it means is that that indicator has readjusted itself. And that is what we call repainting. Is that okay? That is why a lot of people do not like back testing, because when you are looking at back testing, at that point, the indicator has adjusted itself to the price. It has shifted to, I don't know. I'm just trying to find the right way for you to understand this. So it means that if you want to do back testing, it means that the indicator might have readjusted itself to suit the chart. And so you might think that the indicator did the right thing, but you may not know that the indicator readjusted itself as price was moving. So it is good that you do what we call forward testing. So if you get the indicator or if you get any trading strategy, do what we call forward testing. Test it live. When the market is open, you test it. When it says buy, you buy and see whether it will work. When it says sell, you sell to see whether it will work. Don't use the past structure or the past, come on, I'm sure you understand this. So don't use the past results to determine future. Is that okay? So I often advise people that don't do back testing with strategies. Make sure you do forward testing with strategies. That will be the right way to go. Is that okay? So when you find out any indicator or any strategy that you might find on the internet with regards to any strategy, I repeat, whether this envelope strategy, make sure you do what we call forward testing. Forward test it. That is when the market is live, you test it. When the indicator asks you to buy, or when the strategy asks or says buy, you buy and see what will be the outcome. Is that okay? Thank you. And I'm sure you are going to take this message I'm saying very serious, because if you don't, you may say that I didn't tell you the truth, but I have just told you the truth. The real naked truth is what I've just said to you right now. So make sure you do forward testing with whatever strategy you have. Is that okay? Good. Now, there is also another strategy with this same moving averages. In my next video, I'll talk about it. So now I have given you a lot of strategies. Now, when I say strategies, strategies are actually formulas you can use to trade the Forex market. Strategies are actually what tells you to buy or sell. And like I said earlier in my previous videos, a trading strategy should be able to give you the direction of the market or the trend of the market. It should be able to give you the entry point and then the exit point. Where to enter into the market, that is the entry point. And then where to get out of the market, that is the exit point. So any strategy should be able to give you these 3 points: the trend, entry, and then exit. So when you look at this strategy that I gave right now, let me go back to the chart. If you look at this and you want to use this as a strategy, okay, let's assume you want to use this on the 1 hour. Okay, this one, the market is closed. So assuming we wanted to use this as a strategy, at this point, this indicator is telling us over here to buy. It is telling us over here to sell. It is telling us to sell over here, telling us to buy over here. And then what would be the exit point? Supposing, let me clear this. Supposing you bought over here, what would be the right time to exit or to get out of the market? The right time to exit out of the market is when it comes to this level, because you know that it has reached a resistance level where it can possibly reverse. So once you enter here and the trade gets to this level here, then you know it is time for you to get out of the market. So it has given you an entry level and then an exit level. Now, assuming you rather sold over here. So this is your entry level. You sold over here. Then what will be your exit level? Your exit level will be here when it gets to another support zone. So this will be your exit level, because you know that once the trade gets to a support level, it is possible for a reversal. So this will be your exit point. So with this as a strategy, it is giving you entry and exit. And what will be the trend? Look at the direction of the channel. Where is the channel pointing to? The channel is pointing up. So if you look at this channel right now, it is pointing up. So what is the channel saying? The channel is saying that the trend is going up. Okay. The channel, this is on 1 hour. It is saying that it is an up trend. It means it is giving you the direction. It is giving you the direction and also giving you where to enter a buy and where to enter a sell. And like I said earlier, this is what every trading strategy should be able to give you. Every trading strategy should be able to give you the trend direction. Here, the whole channel is pointing up on the 1 hour, and it is giving you entry point and exit points. So every trading strategy should be able to give you your entry point and then your exit point, and also the direction. So every strategy you want to use, I don't know whatever strategy you might have heard or someone might have told you about. That strategy should be able to give you the direction of the market, the possible direction. Let me say it well. It should be able to give you the possible direction of the market, and then an entry point, and then an exit point. I'm sure this is okay. Thank you. I'll see you in our next episode. We will still talk about 2 more strategies with this moving averages. We aren't done yet. We have 2 more strategies to go with this strategy of moving averages. So far, I have given you a couple of them. There are 2 more to go. and you'll get them in our next videos. Subscribe to this YouTube channel and expect more videos on this channel that will help you to become that Forex trader you want to become. I'll see you. Until then, take very good care of yourself.